Every year, we're very fortunate that a large number of primary producers across Australia participate in the Bureau's farm surveys. These producers sit down with our survey collectors, often around the kitchen table on family farms, and in some cases in the head office of corporate farming enterprises in capital cities, and provide detailed financial and other information on their businesses. Today, we're releasing the latest farm survey data on Australia's broadacre and dairy industries. That includes our projected farm performance by state and by industry for 2011-12. These survey findings I'm going to cover refer to around 68% of the commercial scale farm businesses in Australia, and they cover producers involved in growing grains and oilseeds, in running sheep or beef or dairy cattle, or a combination of these. These producers also manage around 90% of the total area of agricultural land in Australia. In presenting our latest farm survey data, I was planning to focus on these two issues. First, how does 2011-12 compare with previous years? And second, what has recently happened to the overall financial position of producers? So what are we expecting this year? Well, normally our farm survey data, we'd expect to see pretty wide variations in financial performance across Australia and across industries. But this year is unusual. It's unusual because basically we've had such good seasonal conditions right across Australia. On the whole, this map shows that the rainfall received in the grazing and cropping areas in Australia to the end of February this financial year has ranged from extremely high in some areas, shown by the dark blue, to well above average, which is the light blue, and average, shown by the white coloured areas. There are only a few regions on the map which have got a red coloured area, which was showing rainfall deficiencies at the end of February. There were some parts of the eastern Australia which are showing a white colour, which is average rainfall, but I think that's going to change after what we saw in the last few days. This map is the Bureau of Meteorology map summarising the rainfall we had over the first 4 days of March. The legend on the right-hand side shows that many areas had between 100 to 400 millimetres of rain in those 4 days. And that area you can see on the map stretching from northeast Victoria right through to northwest New South Wales up that direction. In those areas, I've been told that the rainfall has already been 2 to 4 times the average you usually get in March for those areas. So it's been incredible rainfall that Lee and everyone has talked about this morning. Now, many of those areas in Australia also had very wet conditions last year, as we remember, in 2010-11. And that's also clearly shown on this map I've got up on the left-hand corner compared to the situation where it was at the end of February. And I mean, there's so much rain therefore it looks like a sea of blue, basically, up in that left-hand corner. And as we know, that rainfall filled most of the major irrigation dams, filled many farm dams and water storages, and recharged soil moisture, especially in the eastern states. Last year, of course, it also caused a number of natural disasters, and some of the lessons learnt in managing them are to be discussed in a session we have on the conference program after lunch. We can also see on these maps that there was also last financial year considerably less rain in the southwest corner of Western Australia, and that's changed this year, and I'll come back to this point in a moment. The high rainfall over the last 2 seasons has translated into sharp increases in the volume of agricultural production in Australia for broadacre agriculture. This chart I've shown up here tracks an index of the volume of production of grains and oilseeds, which is in the green colour, and an index on the change in the cattle and sheep numbers over the past few years. Now, in line with those improved seasonal conditions, the volume of grains and oilseeds produced has increased sharply last season, where of course we had record wheat production, and ABARES is estimating already that we think that record's been broken again in 2011-12 because of the winter harvest that we've already had. We can also see that the improved seasonal conditions since 2009-10 have led to an increase in cattle and sheep numbers, and those herd and flock sizes have increased by around 12 to 15% in those 2 years. Now, the impact of these good seasonal conditions on broadacre agriculture is clearly reflected in our latest farm survey data for average farm cash incomes, which is shown here. In 2011-12, what we can see here is that overall, we expect a strong farm cash income performance for all broadacre industries if you take them as a whole. Although, it is expected to be slightly lower than last year, and this is largely because we've had lower grain prices compared to last financial year. Underlying this national result, at a state level, the Minister mentioned already this morning that Western Australia is projected to have the largest increase in farm cash income of around 20% because of the strong rebound in winter grain crop production. And you'll remember I showed you that the seasonal conditions were much better in the southwest corner of Western Australia this financial year compared to last. In New South Wales, Victoria and South Australia, we're projecting similar or slightly lower farm cash incomes than last year, but they are still expected to be much higher than the average over the past 10 years. We're also projecting increases in farm cash incomes for Queensland and Tasmania. Now, if you look at this chart here, you can see you've also got to go back actually to 2000, 2001 to see a higher average farm cash income result for broadacre as a whole. At that time, there was also reasonably good seasonal conditions across Australia, but that was also combined with very favourable farm gate prices for many commodities. The favourable prices at the time were driven in large part by an average Australian US dollar exchange rate of 53 cents. The exchange rate yesterday was $1.06, double what it was in 2001. But fortunately, the impact of today's higher exchange rate on farm gate prices and farm cash incomes is being moderated by the much higher world prices we have now, as well as the good production increases we've seen. If we actually go back further in our database, there are two other features that make 2011-12 unusual. First is that average cash income for sheep farms is expected to be the highest in real terms since before the collapse of the old reserve price scheme. And second, it's the first time since 1978-80, 30 years ago, that we expect both positive average farm business products for broadacre farms in all states and all the main broadacre industries at the same time. We nearly got that last year, but our data was showing negative average farm business profits in Western Australia for last year. So overall, on average, a good year for all the main industries. But in any year, we usually expect parts of some industries where the financial performance will be different from the average. And our farm survey data indicates that this is the case for the beef industry this year. Overall, average farm cash income we're projecting for the beef industry is expected to increase by about 13% this year. And this is driven mainly by beef producers receiving higher average prices per animal because of heavier sale weights, reflecting the good seasonal conditions, and because our data is indicating that a lot of beef producers have already met their restocker demand and therefore have reduced their cattle expenditure, so they've less costs involved. However, this situation is different for farm businesses in Northern Australia that are highly reliant on live cattle exports, particularly to Indonesia. According to our estimate, in 2010-11, that was last financial year, there were around 300 farm businesses in Northern Australia that relied on live cattle exports for 50% or more of their farm cash receipts. And those businesses are mostly located in the regions shown here on the map. In 2011-12, a lower number of live cattle are expected to be exported to Indonesia, and we all know the reasons behind that. This is projected to result in a 40% decline in average farm cash incomes for these 300 farm businesses taken as a whole. They're still showing a positive farm cash income, but considerably less than the previous year. As I mentioned earlier, we also undertake an annual survey of dairy farm businesses, and our latest results here are shown there. We expect that good seasonal conditions will also be reflected in the returns for dairy farmers, with overall farm cash income to be just slightly below last year, but still well above the average for the past 10 years. The good seasonal conditions are expected to result in increased milk production in Victoria, Tasmania and New South Wales, and lower fodder costs in all states. These two factors are expected to help offset the impact of generally lower average farm gate prices received for milk producers in this financial year. Just moving on, the second issue I was going to look at is what does our survey data also tell us about the overall financial position of producers? One point that it does show is that over the past 2 years, many producers have both reduced debt and made some changes to its composition. This graph shows estimated average debt per farm since 2000-2001 for broadacre and dairy farms. What we can see here is that average farm debt increased sharply in the early 2000s, but over the past few years has levelled off and perhaps declined slightly. The levelling off of debt that we're seeing here corresponds to our survey data that indicates that more producers are now repaying debt than increasing debt. In other words, they're taking advantage of the recent more favourable financial outcomes to consolidate their farm business position. Apart from reducing debt, the data from our survey indicates that over the past few years, less producers are purchasing land compared to the 10-year average, and more producers have exchanged shorter-term debt, such as overdrafts, for lower interest, longer-term debt. Again, these actions suggest that producers have been consolidating their financial positions. Another important observation shown here is that investments over the past few years by broadacre and dairy farmers in non-land capital have remained relatively high. Now, non-land capital I'm referring to here is things such as vehicles, plants, machinery and farm improvements. The continued relatively high levels of investment in this area is in line with a number of factors. These include the improved cash flow for many farms, the continued expansion we've seen in cropping enterprises and requiring additional equipment, relatively low interest rates, and the high Australian dollar probably making imported machinery, vehicle and plant more attractive than previously. These investments in farm machinery, particularly where they're upgrading technology, and achieving farm improvements is obviously a good sign for the future in terms of scope to increase productivity as we move ahead. Now, just in finishing up then, there's 3 key messages I wanted to leave today. First, 2011-12 is one of those rare occasions for Australian agriculture when there's expected to be both a relatively favourable average financial outcome across all states and all of the main broadacre industries. Second, there has been an improvement in productive capacity of Australian agriculture, as evidenced by the significant rebuilding of livestock numbers, the continued strong investment in farm capital, and as well as that, of course, the current high irrigation and on-farm water supplies. And third, many producers have taken advantage of the recent relatively favourable returns to consolidate their financial positions. Now, while this is all positive, we all know that the prospects ahead for agriculture will also depend, crucially, on the world outlook for our main export commodities. And this is an issue that will be examined in more detail at the various commodity sessions we have at the conference over the next 2 days, and I encourage you to see those sessions. Thank you.